Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss some potential overseas posting examination questions and their corresponding sample answers for bankers. Today marks part 11 of my Path Through the Corner Office series for overseas posting examination and their corresponding sample answers for bankers. For a gold card holder, RBI has prescribed the time limit for sanction of ADHOC credit facilities as option A 15 days from the receipt of proposal, option B 10 days from receipt of proposal, option C 7 days from receipt of proposal, option D 25 days from receipt of proposal. The answer is option C 7 days from receipt of proposal. Export credit not otherwise specified ECNOS arises when option A EPC is availed against the firm export order but no LC is available. Option B, pre-shipment credit is not liquidated by submission of export documents within 360 days. Option C, post-shipment finance exceeds 180 days from date of shipment. Option D, packing credit is sanctioned to sub-suppliers under an inland LC. The answer is option B, pre-shipment credit is not liquidated by submission of export documents within 360 days. Post-shipment finance is defined as loans or advances granted to an exporter from option A date of receipt of export order to date of shipment, B date of shipment of goods to date of realization of export proceeds, C date of LC opening to date of bill negotiation, D date of advance payment received to date of utilization by exporter. The answer is option B date of shipment of goods to date of realization of export proceeds. ECGC's whole turnover cover for packing credit is known as option A ECIBWTPS export credit insurance for banks, whole turnover post shipment, option B ECIBWTPC export credit insurance for banks, whole turnover packing credit, option C WTPCG whole turnover packing credit guarantee, option D both B and C used interchangeably for different purposes. Answer is option C, WTPCG, whole turnover packing credit guarantee. The next question is running account facility for packing credit means option A, multiple exporters share of single packing credit account to reduce transaction costs. B, the first debit in the account can be set off by the first credit without requiring one-to-one matching of PC with specific export bills. C, the packing credit account transfer a fixed period of 12 months automatically renewable. The credit is disbursed in installments running up to the full sanction limit. Answer is option B. The first debit in the account can be set off by the first credit without requiring one-to-one matching of PC with specific export bills. Under substitution for export contracts for EPC, which of the following is not permitted? Option A. Substitution of the commodity covered under original export order. B. Substitution of the overseas buyer covered under original order. C. Issuing an export order in the name of a sister concern to substitute the original order for which EPC was drawn. D. Liquidating existing packing credit with proceeds of export bills against no packing credit was drawn. The answer is option C. Using an export order in the name of a sister concern to substitute the original order for which EPC was drawn. Extension of packing credit beyond 360 days requires prior approval of option A Reserve Bank of India's regional office, Option B, ECGC, wherever the bank has covered packing credit under WTPCG scheme. Option C, FEDAIs for the bank's head office. D, DGFT if the export order involves restricted goods. The answer is option B, ECGC, wherever the bank has covered packing credit under WTPCG scheme. The EEFC exchange earners foreign currency account is maintained. Option A as an interest-bearing savings account with credit facilities permissible against balances. B as a non-interest bearing or current account with no credit facilities, either fund-based or non-fund based. C as an interest-bearing term deposit account convertible to INR at maturity. D as a current account bearing 3.5% interest per annum as per FEDAI guidelines. The answer is option B as a non-interest bearing current account with no credit facilities, either fund-based or non-fund based. Another EEFC scheme, the sum total of accruals in the account is during a calendar month must be converted to rupees by option A, the last day of the same calendar month, B, the last day of the succeeding calendar month after adjusting for utilization and forward commitments, C, within 7 working days of credit to the account, D, the last day of the quarter in which the credit is received. The answer is option B, the last day of the succeeding calendar month after adjusting for utilization and forward commitments. All categories of foreign exchange earners are allowed to credit what percentage of their foreign exchange earnings to EEFC accounts? Option A, 50% of earnings, B, 75% of earnings, C, 100% of earnings, D, only export proceeds received through banking channels subject to a cap of USD 1 million. The answer is option D, only export proceeds received through banking channels subject to a cap of USD 1 million. Diamond dollar accounts DDA are available to firms dealing in diamonds and precious metal jewelry, subject to a minimum average annual turnover of option A rupees 1 crore during the preceding 3 licensing years, option B rupees 3 crores during the preceding 3 licensing years, option C rupees 5 crores during the preceding 3 licensing years, option D rupees 10 crores during the preceding 3 licensing years. The answer is option B, rupees 3 crores during the preceding 3 licensing years. The maximum number of diamond dollar accounts that an eligible firm can open with its bank is option A 2, option B 3, option C 5, option D 7. The answer is option C 5. For setting up an overseas office, an AD category I bank can allow initial remittances up to option A 10% of average annual turnover of the last 2 years and or 20% of net worth, whichever is higher. B 15% of average annual sales or income or turnover for the last 2 financial years or 25% of net worth, whichever is higher. C 20% of average annual turnover of the last 3 years or at 30% of net worth, whichever is lower. D 25% of average annual turnover of the last 2 years, subject to a maximum of USD 5 million. The answer is option B 15% of average annual sales, income, and turnover of the last 2 financial years or 25% of net worth, whichever is higher. For recurring expenses of an overseas office, remittances up to what percentage of average annual turnover are allowed? Option A 5% of average annual turnover of the last 2 financial years, B 10% of average annual turnover of the last 2 financial years, C 15% of average annual turnover of the last 3 financial years, D 20% of average annual turnover of the last 2 financial years. The answer is option B 10% of average annual turnover of the last 2 financial years. Under advance payment against exports, an exporter receiving advance payment from an overseas buyer is obligated to ensure shipment within option A 6 months from the date of receipt of advance payment, B 1 year from the date of receipt of advance payment, C 180 days from the date of the export contract, D 2 years from the date of receipt of advance payment. The answer is option B 1 year from the date of receipt of advance payment. Long-term export advance up to 10-year tenor, receipt of advance of USD 100 million or more must be immediately reported to option A FEDAI Mumbai, B DGFT Regional Office, C Trade Division Foreign Exchange Department RBI Central Office Mumbai, D Ministry of Commerce and Industry Department of Commerce. The answer is option C Trade Division Foreign Exchange Department RBI Central Office Mumbai. Under the exporter's caution list, when a caution listed exporter submits shipping documents for negotiation, the AD bank may accept them only if option A the exporter provides additional collateral equal to 50% of the export bill value, B the exporter produces evidence of advance payment received or an irrevocable LC for the full value, C the ECGC provides a specific approval of the transaction, D the branch obtains a status report from the buyer's bank confirming good standing. The answer is option B. The exporter produces evidence of advance payment received or an irrevocable LC for the full value. Payment of agency commission on exports is prohibited in which of the following cases? A. Exports under counter trade arrangements through escrow accounts. B. Exports made by Indian partners towards equity participation in an overseas joint venture or WOS and exports under rupee credit route. C. Exports of goods exceeding invoice value of USD 1 million. D. Exports of restricted goods under special DGFT license. The option the answer is option B. Export made by Indian partners towards equity participation in an overseas joint venture WOS and exports under rupee credit route. The period of realization of and repatriation of export proceeds for all exporters, including SEC units, is currently A 6 months from the date of export, B 9 months from the date of export, C 12 months from the date of export, D 15 months from the date of shipment for all categories. The answer is option B 9 months from the date of export. For goods exported to a warehouse established outside India, the period for realization of export proceeds is option A 9 months from the date of shipment, B 12 months from the date of shipment, B C 15 months from the date of shipment, D 18 months from the date of export. Answer is option C 15 months from the date of shipment. What drawings and undrawn balances in export trade are permissible subject to a maximum of option A 5% of the full export value, B 10% of the full export value, C 15% of the full export value, D 20% of the full export value. The answer is option B 10% of the full export value. For opening and hiring warehouses abroad, what is the maximum permissible export outstanding of the applicant as a proportion of exports in the previous financial year? Option A 2%, option B 5%, option C 10%, option D 15%. The answer is option B 5%. For opening and hiring warehouses abroad, the applicant must have a minimum export turnover of option A USD 50,000 during the last financial year, option B USD 100,000 during the last financial year, option C USD 200,000 during the last two financial years, option D USD 500,000 during the preceding 3 years. The answer is option B USD 100,000 during the last financial year. Under the set of export receivables against import payables, which of the following transactions is excluded from the event? A. Set off between the same Indian entity and the same overseas buyer. B. Export and import transactions with ACO member countries. C. Netting on net basis through an in-house centralized settlement arrangement. D. Set off between group companies through a legally enforceable agreement. The answer is option B. Export and import transactions with ACO member countries. An exporter may gift unsold goods at a trade fair and exhibition abroad up to a value of option A USD 2,500 per exporter per exhibition, B USD 5,000 per exporter per exhibition trade fair, C USD 10,000 per exporter per exhibition, D USD 1,000 per exporter per calendar year. Answer is option B USD 5,000 per exporter per exhibition and trade fair. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.